Good afternoon. I first came to the Storehouse in 2002, actually. I came well before I was at Diageo. I came as a tourist and kind of brand fan. I was engaged over a pint of Guinness. So I go way back here. But look, I do want to welcome you. For those of you who are with us here in person, welcome to Dublin, the home of Guinness. And for those of you on the webcast, it's great to have you with us this afternoon. We're excited to share with you more today on Guinness, and we have an experienced group of presenters with us to do this, reinforcing our commitment to this incredible brand, which is an important and growing part of our portfolio. While the focus of today is clearly our iconic Guinness brand, I will also share our thoughts on the industry and the current backdrop, which I think is important context, particularly given the quarterly trading update shared yesterday. You will also have the opportunity to ask questions throughout the day. But first, our cautionary statements. So let me start by sharing 5 key messages we hope to leave you with today. First, as a reminder, Diageo is a market leader with a strong portfolio of category-leading brands. Second, while the current environment is tough, we remain of the view this pressure is largely macroeconomic driven, and we continue to believe in the attractive long-term fundamentals of our industry and in our ability to outperform the market. Importantly, our portfolio is well-positioned in premium spirits and beer, and we see a significant opportunity ahead in both spirits and Guinness, our focus today. Third, Guinness is an iconic brand in our portfolio and one where we have successfully evolved our strategy to drive higher growth, particularly through recruitment. And we will share with you today how we've done this. Importantly, our fourth message is the belief that we have that Guinness has a strong runway for continued growth, recruiting new consumers, leveraging digital, and driving innovation, including the significant opportunity we have with Guinness 0.0. Finally, but importantly, I want to leave you with an appreciation that Diageo is evolving as a company. We're moving at speed to focus on what we can manage and control, which is more important than ever in the current volatile environment. And you will have seen, we announced yesterday with our trading update the introduction of our Accelerate program. This program will ensure Diageo emerges stronger and more agile as the market recovers, and Nick is going to talk to this later. So before I talk more to Guinness, I'd like to start by sharing my current thoughts on our business and the sector backdrop. So I imagine a number of you will recognize this slide. At Diageo, we are proud of our portfolio of brands that play a role in a broad range of consumer occasions and continue to recruit new consumers globally. We have 13 billion-dollar brands, including Guinness, and we are the number 3 player in TBA and number 1 in international spirits, where we are 1.5 times larger than our next international spirits competitor. Our brands are culturally relevant, connecting and engaging with consumers, and we do this at scale across our markets. Today, we will take you through how we're doing this with our 3rd largest brand, Guinness. Our footprint is global and diversified with an attractive balance of stability with our developed markets and also growth from our emerging markets, which make up approximately 60% and 40% of our net sales, respectively. And we will share with you how we are leveraging our footprint to grow Guinness through several varied route-to-market models. Moving to the broader industry environment, I'd like to share a slide we first showed at CAGNY earlier this year. And although the current macro has become a little more uncertain with consumers becoming more cautious in the last few months, our view on the sector has not changed. What we are continuing to see is near-term pressure, largely macroeconomic driven, and this is continuing to adversely impact spirits. Longer term, we continue to believe that spirits remain an attractive sector with a long runway for growth where we expect to continue to gain TBA share. So let me take you through this in a bit more detail. No doubt the current industry backdrop is tough, arguably more than in prior cycles, and there are clear headwinds outside our control impacting consumer confidence and spending power. And the uncertainty for consumers has increased since we last reported our H1 results in February. This is most pronounced in our largest market, the US, where although we've been seeing real-term wage growth since 2022, it's still below the long-term trend. And in the meantime, high levels of inflation continue to translate into consumers getting a lot less for their money. And as you can see on this slide, US consumers are currently, on average, spending around 22% more for 8% less than what they would have got 4 years ago. So we're seeing that come through in lower volumes for the industry. Given this pressure, understandably, the consumer is a little more cautious, and the pace of recovery remains uncertain. Additionally, the threat the potential tariffs might cause outages and/or price increases is also weighing both on consumer sentiment and confidence, and which makes our immediate focus on managing what we can control even more critical than ever. We recognize the time for industry recovery may be longer, but it also provides an opportunity for Diageo to emerge stronger and more agile as a company. So as I've consistently said, longer term, we continue to believe spirits has an attractive runway for growth, supported by favorable fundamentals, with the spirits trajectory in recent years more positive than the rest of TBA, reflecting that it has continued to take share from beer and wine, a trend we expect to continue. And in particular, I'd like to quickly cover off some thoughts on Gen Z, where there's a lot of largely negative commentary on the read-through from this generation for the market. First, it's forecast to be the largest generation ever, underpinning future growth and the TBA market, and forecast to become the only generation ever to reach 2 billion people with associated spending power. Also, it's worth highlighting that we are seeing increased female participation in per capita consumption in key growth markets, such as India and China, and this is an area where we think spirits can play to its strength of versatility. Additionally, you'll hear today about how we've done a great job of recruiting women to Guinness and can leverage learnings from this across the portfolio. So this younger LPA plus group has a higher household spirits penetration than the average for the total drinking population across our key markets, including in the US, reflecting they're coming into spirits earlier. So importantly, in the US, they also spend a similar proportion of their annual expenditure on alcohol as other generations, and we would expect their absolute spend to rise over time, not necessarily drinking more, but premiumizing and drinking better. So finally, let me share again what we are doing to address moderation, or what we call mindful consumption. What I've said in the past is that this is potentially the biggest potential disruptor of our industry, but it's also one of our greatest opportunities as the market leader in the fast-growing non-alcohol spirits category. We've also recognized our responsibility to educate consumers to make informed choices, making it clear when alcohol consumption is not appropriate, and providing transparent health information about alcohol misuse. And while at Diageo we believe in celebrating life every day, everywhere, we have drinks for every occasion, including some more suited to mindful consumption. Our insights tell us that in occasions where others may be drinking alcohol, some consumers want to enjoy a non-alcoholic drink, yet still want to feel part of the occasion. And non-alcoholic spirits and beer have a role here and can source volume from outside spirits, in particular from beer and soft drinks. Interestingly, in the US, 93% of non-alc buyers also purchase alcohol with a higher total basket spend. And we are building non-alcoholic brands, including Seedlip, which grew value in the US double digits since launch, and the newly acquired Ritual, the #1 non-alc spirit brand in the US, which provides spirit alternatives perfect for mixing. Of course, we also have Guinness 0.0, which has a clear role that we will share with you today. Launched first in GB in Ireland and then rolled out into the US, it is recruiting new, younger LPA plus consumers to the brand with an exciting opportunity to accelerate growth and expand into more markets. With that, it's a good segue to why we're here in Dublin. Guinness is a great example of our growth ambition in action and successfully driving outperformance. Today, the team will share how its success is the culmination of innovating to respond to existing and emerging consumer trends and applying our world-class brand building, our enablers, and dial-up behaviors. Beer was 16% of Diageo net sales in 2024, with Guinness the largest brand in our beer business and almost 2/3 of our beer NSV. Guinness is also our third largest brand after Johnnie Walker and Smirnoff, so how Guinness is performing plays a key role in our performance. On a 3-year basis, the Guinness CAGR was circa 15%, nearly double the rate of total beer and ahead of all price segments. Guinness 0.0, which you will hear a lot about today, has grown at a tremendous rate since launch, but arguably, we are only really getting started on what it can do, with plenty of reasons to be excited going forward. Notably, Guinness sits in 2 important growing segments in beer. In all of its major markets, excluding Ireland, Guinness sits in premium beer, a segment outperforming the broader category. And with Guinness 0.0, we have a strong role to play in the high-growth non-alcoholic segment. Guinness also fits with the changing consumer trends, with consumers looking for exploration and more differentiated and flavorful experiences, something that has benefited the brand. The brand's relentless focus on quality has been important with consumers comfortable paying a premium for this great experience. But what's exciting to me is that despite our success to date, we still only have a small value share, so there is a significant opportunity for further growth. Guinness holds an important place in our portfolio and is rightfully a key part of our strategy to recruit and premiumize consumers. Guinness is a brand differentiated from other beers and one we have grown by applying our proven Diageo brand building strategy, and you will hear a lot today on how we have driven that growth by successfully recruiting new consumers across demographics and also across occasions. Not only has this made a significant contribution to our top-line growth, but it also adds value to our overall portfolio, as Nick will talk to later. So let me also take a moment to remind you of some of the brand's incredible heritage. So in 1759, Arthur Guinness had the foresight to sign a 9,000-year lease at St. James's Gate, which, if you do the math, we are only 266 years on from that. Arthur set the precedent early for some of the elements of Guinness that are still key today, from exporting to countries around the world, from Dublin with West Indies Porter in 1801, to the Harpen signature that you see on our packs and marketing today that still signify our commitment to quality. Guinness has an incredible track record of innovation, in particular leveraging technology to improve quality and access to new occasions. You see here an ad for the widget, a step change which enabled the at-home serve to be great quality, and it remains a significant focus today with dispense and liquid innovation, including microdraft and, of course, Guinness 0.0. I'd be remiss to not mention the Guinness Storehouse, the amazing building we're in today. If it were a market, it would be the 7th largest Guinness market, and it is important in keeping Guinness exciting and vibrant, top of mind for consumers. Finally, our advertising is also something we're justifiably very proud of, from our first ever newspaper ad published in the UK in 1929, to the instantly recognizable Gilroy ads that ran from the 1930s, epic TV ads that maybe a few of you might remember, and that have evolved today to the culturally relevant, digital-focused work you will have likely seen, and we will take you through later. So it's not surprising, given its extensive legacy and strong marketing, that Guinness is today well recognized as a highly distinctive brand. Kantar rank it highly both within beer and within the broader consumer set more broadly, specifically for its distinctiveness. Our own tracking data also shows that across our key markets, Guinness scores more highly than our competitors for this distinctiveness, defined as a trendsetter in the category, unique, and not easily switched with the competitor. From F19 to F24, in most major markets, Guinness has grown household penetration more than the beer category, recruiting about 4 million new drinkers globally in the same period. Additionally, the team's been able to track Guinness volume growth back to 1840, which also shows impressive growth over time. While there have been periodic setbacks from significant scale events, you can see the continued upward trajectory. Today, we are number 1 beer share in our top 2 markets as a result of the success of our strategy over the last 5 years. And we've recruited new consumers at scale, setting us up well for the future. And what's really important is that within that broader recruitment, we have increased penetration amongst younger consumers, as well as with female drinkers. The majority of Guinness drinkers are now younger LPA plus than they historically would have been. And in GB, in the last year, we have recruited LPA plus consumers more than any other major beer brand. And this is true beyond our three largest markets with Guinness Smooth, and innovation in Africa helping recruit younger, more female consumers with penetration strongest amongst LPA under 24-year-olds. So today we will share more insight on how we did this. As you know, Diageo continually monitors consumer trends and insights, and I reminded you earlier of Diageo's growth strategy, which shared the key trends which we are focused on leading and shaping, including with food, luxury, and convenience. I also told you that Guinness plays well into this and addresses a number of key consumer trend categories. So selecting a couple to talk to, moderation, where consumers are increasingly seeking balance and wellness, including consuming alcohol in more mindful ways. Beer has led the non-alc revolution, shifting behaviors around more inclusive socializing and raising expectations of quality non-alc without compromise. Guinness 0.0 is a strong participant. And in exploration, consumers seeking authenticity and craft across different categories and looking for brands with interesting and diverse provenance stories, rich histories, clear and transparent values, and responsible action. Guinness again delivers against all of these attributes, and by leveraging how Guinness can play into these trends, we've been able to drive recruitment, also amplified by an evolution in our brand strategy over a number of years. Over the last few years, we've made some deliberate choices to evolve how we build and recruit with Guinness. From 2015, we recognized the need to evolve our scale global marketing approach, and post-COVID, we saw this really delivering growth, outperforming the category. Grainne will walk you through why and how we made this change, but our participation in culture at scale and our powerful innovation is really key to this success. More recently, we've made some active changes to our route to market strategy, and you'll hear more from Dayalan on this later, something we accelerated in 2022 and that we firmly believe will contribute to both the top and bottom line. Recent strong examples in Africa include Guinness Nigeria and Cameroon, and Dayalan will take you through our broader global approach in more detail. And I'm confident that we have more runway for growth. We are experts in building premium brands, and our skills from global spirits brands such as Johnnie Walker and Don Julio are also just as relevant for Guinness. More specifically, the same capabilities and tools are used across the entire portfolio. Grainne will talk you through our Diageo way of brand building and specifically how our approach to brand building has underpinned what we have been doing with Guinness. I'm also going to spend a bit of time on our global cultural partnership with the Premier League and on Guinness 0.0, where I believe our ability to elevate brands at scale is a competitive advantage. Guinness is the official beer of the Premier League, and Guinness 0.0, the official non-alcoholic beer, a sponsorship we entered into last year, providing an opportunity where we can do what we do best with our brands, activate globally at scale. The Premier League isn't just football, it's truly a global occasion. It's the most popular football league in the world, aired in over 150 countries, enjoyed by 2.1 billion viewers, with over 300 games per season and running for 10 months out of the year. Millions of fans come together every week in stadiums, pubs, and homes, connecting over their love of the game. And Guinness taps into the passion connecting the beautiful game and the beautiful beer, also supporting pubs and retail outlets to help create fun and engaging fan experiences, driving traffic. And Nuno has some really great examples to share on this later with what we've done in GB. Since making our debut in August, already our Premier League activations are providing access to new occasions across more countries, and we're seeing this drive commercial and consumer excitement and ultimately recruitment with increased brand visibility and share on match days. And we're only getting started with the opportunity to accelerate Guinness growth further through the Premier League. As I discussed earlier, we've always recognized our responsibility to educate consumers to make informed choices. Diageo has promoted responsible drinking since our formation in 1997, over 25 years ago. But Guinness has an even longer history of promoting moderation, as you can see in this quote from 1973, an ad from the 1980s show. In 2019, Guinness won a prestigious Cannes Gold Lion Award for its moderation campaign entitled Guinness Clear, which through a TV ad, social post, celebrity and influencer endorsement, turned ordering water into a positive bar call. So more recently, consumers' desire for more balanced and mindful drinking has fueled the demand for non-alc propositions without compromise. Guinness 0.0, made by our expert brewers to the same quality as Guinness Draft, is going from strength to strength. We've also invited our GMs from some of our largest Guinness markets and also our head of beer from the US, Barry, Nuno, and Laura, to take you through 3 case studies today. And while some of the themes are consistent, you can really see how they are applying and being creative with them to drive market-specific growth with room to grow further from here. To give you some context on the size of these markets, Ireland, GB, and US, respectively, deliver around 60% of our global Guinness NSV, and so are meaningful in understanding the Guinness story. There are a number of exciting opportunities the team are going to talk about today, and all of these will contribute to the future growth potential for Guinness. There is a great runway for growth, including recruiting a broader consumer base, particularly Premier League, to access more occasions, and of course the significant opportunity to take Guinness 0.0 global. Nick will come back and share color on these opportunities later, as well as talking about more on the Accelerate program we announced yesterday.